All right, Dennis. During live trading, the trade management is as important as anything else. For day trading, what are some of the guidelines for your entries or exits? Partial exits, exit timing, predefined price zones, etc.
The first thing is the premise. Let's assume for this purpose that we're talking about day traders, and let's assume a normal range type day, not the rabbit dog day, just the everyday type of day that we get. I think we have to understand, first of all, what is the direction of the move? How does today's move fit in with the previous day's move? Where were the key points yesterday? Because we always have to resolve yesterday's battles before we take on today's. And if we've had a breakout above the previous day's high, as we did today, then obviously, first and foremost is where are the potential targets that a breakout will be seeking, and then try to put in a timing idea that makes sense. Anybody that thinks this is just about specific numbers is wrong. It's about the timing. It's about the psychology. It's about squeezes. And so you put that into perspective and say, perhaps the best way to play this is at the conservative end if we're going to take it. We don't have to buy the aggressive zone today, but we may not, want to short it either. So sometimes it's best to sit on the sidelines a few minutes and let those trap traders get squeezed first. We felt that was today's trade, for example. So you can buy aggressively, especially pre-market, if you understand the game and what's trying to be done. Our feeling was that the 84 was being protected, and that's why we had targets take out the high and probably not come back today. That's just part of one of our significant trades. So as a day trader, we try not to get into trouble and not to expect too much, and we try to get on the scoreboard first, get a few points. And usually the first trades are the hardest, where you're trying to get your seed capital. If you get a few points, then you can use that in the market's money to risk for the primary trade, which we believe as a day trader you want to get. Your day is made if you get the primary trade, which is, I believe, the largest trade of the morning. And normally, if you do that, the rest of the day is easy because now you can choose your battles, and most of the traders will be arguing over lunch while you can go out and take a walk or do whatever. So we like to get that primary trade, and you have to risk. If you don't risk your first couple of points, you're not going to get it.
Right.
And this year the game has been you got to risk at least 2 or 3 points and be aggressive to play, and that's an example of adapt or die. Because this year they've done that, since last November. They've just gapped up like the Panama Canal. They raise it up and float it up, and then they do it again and raise it up.
Right.
And then all of a sudden risk and reward changes and the game goes the other way. The general had called his target for 1685. Our work agreed with his. I said step by step, but we see what you're talking about. ABCD was right on the money. So at that point, now we're thinking let's go backwards and let's test for the downside. My work showed that 52.75 as the middle of the year. That was a 50% pullback. We hit that right on the head. And so as a day trader, you want to fit in your day trades with the position and swing trades. And I think that's where day traders go wrong, is they don't see the bigger picture and try to fit in. So in terms of stops, let's say you're using like the pristine method. If you're using, assume that the day is going alongside, if you're on the red line and the green line and you're moving up, every new high, you may be scaling out a little bit. But when it pulls back to the blue line, you're buying again, because those are your position trades. Those are your swing trades. As long as they're above the blue line, you're okay. So I believe in chunks. I believe that the market continually takes profits. And the trick is to guess where will the market be taking profits. When people are taking profits is the time that you want to put on your contras, when you want to say, okay, I'm risking two points now, but I could be getting perhaps 8 or 10 the other way. So that's part of sequence trading, and I think most traders really complicate this business when all they should be doing is thinking about where is the likelihood that everybody wants to take profits. 10 guys today said 1601 hit. Guess what? You want the 1602, you want 1603, it'll give you a 50-point move off the bottom. Now you're risking, 5 or 6 points for those last couple.
Right.
So that's part of it. And when you put the swing traders and the position traders into play and you understand their game, because they're the ones who move the market, your life will be much easier as a day trader.